Welcome back to the Dividend Diplomats YouTube channel. You know you're rolling with your boy, Bert, the herd, the one and only, and your boy, Lanny, the Dividend Diplomats. And guys, it's time to talk about another stock that has been beaten up over this past year.
That's right, everyone. But before we do, smash that subscribe button. Give this channel a thumbs up. If you haven't already, we're closing it on 14,000. Then we're going to crush 15,000, 16,000, 20,000, 100,000 subscribers. We got some time to get there, but everyone help us reach those goals so we can hit those next big milestones.
The more videos we keep putting out, we're just trying to pump out the dividend stocks right now. We've been doing more dividend stock analyses, probably 2 out of each 3 videos we put out each week because the market is turning south. We are in bear market territory. We just put out, the 2 stocks that Bert's been eyeing here this past Sunday. So this is going to be another stock that's hitting the radar because they're down well over 20%, even almost 40% in the last 52 weeks.
Yeah, and just so everybody knows, we're not just doing this for the fun of it. We're actually going through each one of these ourselves, trying to figure out, are we going to invest in these on our own? So you just know us by now. We put our money where our mouth is with our purchase videos. We show you that we are buying the stocks that we are analyzing. So the reason we have so many analyses is, to Lanny's point, there are so many deals out there, so many great companies. We're sorting through it. So we want to share our thoughts with all of you, so us as a community can work together to keep buying those undervalued dividend stocks.
From a commercial in the Cleveland area. So if you're from Cleveland, give this a thumbs up because the deals are so good.
Love it. And that's the beauty of this market, because man, the S&P 500 cannot seem to catch a break. It continues to slide down, Lanny. Just when you think the market may finally be turning, it might be stabilizing, another inflation reports out, another interest rate hikes down the road, another poor economic indicator comes out, causing the market to head further south.
Yeah. And as dividend investors, we relish this time. We actually like volatility because, guys, the name of dividend investing is you're buying passive income. You're building an income stream. And when times are turning south, you're able to buy more income for less money. I know I've been investing way more, as you've seen from our stock purchase videos. We'll have another one coming out this week, and you'll see Bert went pretty hammer during that last week as well.
Yeah, we both have been diving in, taking advantage of these sales. And what's going to be fun about this stock analysis and this company, this is one we've owned for several years now. It's changed names since we bought the company. It's launched a major new product that has growing that revenue stream from there. We are excited to talk about this company, pull back the financials, run them through our screener, and see how this company is performing.
Yep. And guys, I know there's probably many of you out there who've seen Top Gun Maverick. If you're one of those, definitely leave a little note in the comments. Give this video a thumbs up as well, because Top Gun was produced by none other than Paramount Global, or Paramount Studios. But we're talking about Paramount Global, ticker symbol PARA.
And when we bought them, they were Viacom CBS, formerly ticker symbol VIAC. They are now Paramount Group, ticker symbol PARA. They have taken that content library. They are pushing the chips in. They're no longer licensing out that content to your Netflixes, to your Amazon videos. They created Paramount Plus, their own subscription service, their own app that you can get on Roku, you can get on your Samsung TV, all of those big players. They're saying, we have the content. That's what's going to crush it here in 2022 going forward. Come get it from us.
Yeah. And actually, I think when I first bought them, they were CBS. It was literally CBS before they merged with Viacom.
Man, so yeah, you've had them for a long time here, Lanny.
3 names and 3 tickers.
Yeah. So talking about that content library, let's just run through some of them quickly. MTV, Nickelodeon, Paramount Global, all the movies. Lanny, I know you're a big movie buff, especially when it comes to this. So after we go through these channels, just list out some of those major chains that they have.
Yeah, they've got a ton of movies that are coming down the pipeline as well. Obviously, Top Gun was just released. They had Sonic the Hedgehog 2 that was also released earlier. Kids, plug your ears. Jackass series obviously is through them as well. but they've got some big hitters. They own the Rugrats. I know as a kid, I was all about the Rugrats. But guys, Transformers, Mission Impossible, Krasinski's A Quiet Place. We're expecting those are three massive movies that are coming out, as well as another Teenage Mutant Ninja Turtles.
Yeah, so think about that. People are going to go to Paramount Plus for those brands, for those subscriptions, and that's what makes them relevant in there. They have this massive, deep pool of content that they can always tap into when they need it most.
And, with Paramount, obviously people are going back to the theaters because, guys, Top Gun Maverick topped over 800 million globally so far. I think through June 17th, somebody could check me on Box Office Mojo there. And Bert, the biggest piece here, though, again, let's talk about streaming, because obviously Paramount is in the big streaming wars, and that subscriber growth, how is it looking right now for Paramount?
Their subscriber growth is crushing it. Over 60 million subscribers. That I think we pulled it up, Lanny, 6 million new subscribers in Q1 too. Pluto TV, their free streamer that shows the advertisement, has all those legacy things. It's actually a pretty cool app. Check it out if you want to go for some nostalgia for some old MTV shows, some Real World, all of those classics from when you were growing up. They have them on there. Pluto has 68 million active subscribers. So I think that's what's cool, Lanny. And I mean, talk about their revenue too, because this is obviously a driver and some pretty kick butt revenue numbers.
Of course, yeah. Guys, Paramount Global in Q1 earned over $7 billion. TV media actually went down by about 350 million, but the direct to consumer, the streaming, went up 500 million. So, they have many levers that they're pulling. Obviously, they still have the filmed entertainment revenue stream, which I'm expecting that to be huge now come Q2 and Q3. So they have many different levers. So when one revenue stream may go down, the other one's going up. Obviously, streaming being the one that we are noticing the largest increase. But it's not just about the revenue and the income that they have. Because, Bert, that balance sheet's not looking too shabby right now.
No, it is not. They've got over $5 billion of cash on hand, and their debt is going down too. They've repaid over $2 billion of notes. So they're putting their cash to work to pay down the debt. They also have a lot of cash on hand, though, because think about what's going on with Netflix right now, the streaming giant. I guess I got to say Warner Media Discovery too. Yeah, it is a burden to keep generating that content. So you need to have cash on hand. You need to be agile, spend money to compete in this sector.
Yeah. In the old words, got to spend money to make money. But guys, Paramount Global stock, even though they have significant subscriber growth, solid, okay balance sheet, performing decently well from an earnings standpoint, their stock is down 24% year to date with the rest of the stock market. And in the last 52 weeks, they're down over 38%.
So let me get this straight. They're down year to date. Let's summarize some of these things here that we've talked about. Huge content library, growing revenue, growing subscriber base, huge cash piles sitting there in their Brinks truck or their safe, whatever they have at the headquarters, and they're paying down their debt. Is that right, Lanny? Did I hit all the big points there that we've covered so far?
Solid points, but it's time to run through the dividend diplomat stock screener focused on three metrics. Quickly, they are the price to earnings ratio less than the S&P 500, 2, the dividend payout ratio less than 60%, 3, a history of growing their dividend. We'll look at the bonus metric, the dividend yield, but Bert, kick us off with that price to earnings ratio for Paramount Global.
All right. So as of prices as of June 17th, Friday close, we're recording it on Sunday, June 19th. That last close price was $24.56. Forward EPS $2.60. PE ratio 9.45x, less than half of the current S&P 500 PE ratio, Lanny.
Yes, it is, Bert. A very low PE ratio, obviously some good signs of undervaluation, probably much lower than some other, I know Disney, they're constantly trading at a high multiple. Apple, a little higher of a multiple. So Paramount Global here, trading at a very low earnings multiple.
Moving into that second metric here, the dividend payout ratio, annual dividend, 96 cents. Divide that by the 264 EPS. Payout ratio is 36.92%, just a hair below our perfect payout ratio range. Again, though, remember, it takes a lot of cash, a lot of money to compete, generate that content there. You probably don't want Paramount having too high of a payout ratio, 36%. Perfect, if you ask me.
We're going to jump into this dividend growth rate because there's not much to talk about yet. So Paramount as a stock itself hasn't traded for that long, so there's no history of growing a dividend. But if you look back in the Viacom, CBS, and even the CBS, they would increase their dividend once every few years. And I believe the last time they did, they went from 20 cents to 24 cents per share, or a 20% dividend increase. So they may do one or two of those every, 5 to 7 years. So I always like to say, like, on average, the dividend does grow by around 6 to 8% on average for Viacom or for Paramount Global. Sorry about that.
It's hard to keep them straight, especially when they keep changing their names. CBS, Viacom CBS, Paramount Global. Maybe they'll go back to Paramount Viacom CBS. They get the nice long ticker in there.
And
So
go talk to AT&T about that.
yeah.
So, Bert, what's that yield look like?
Yeah. So remember, everybody, we would expect the yield to be much higher than they would historically because that price continues to slide, especially with the price being down 23%. We're expecting a pretty solid yield here with that annual dividend of 96 cents. Your yield is now almost at 4%. It is at 3.91%.
Oof, I'm really liking that.
Yeah. So let's summarize here some of the metrics. P ratio 9.45, payout ratio 36 to 37%. Dividend growth, they're working on it. We'll get back to the dividend growth. They have some big increases in the past, on average, pretty solid when we break it down, like you did a few moments ago, Lanny. And their dividend yield is 3.91%.
So, guys, are you buying Paramount Global stock? Are you going to take a chance and add a share under $25 per share on this global entertainment media giant? Bert, what's your take?
Yeah, I think it's worth a spot on the watch list. I mean, I don't see a reason why you wouldn't consider it. Solid yield, great earnings. I mean, it's not just that the metrics are looking great, the company's performance, their subscriber growth. And I think, to me, that's the key of why Paramount Plus is growing. They kind of push their chips all in on the streaming service. And it's delivering the results. You're seeing that subscriber growth. So to me, that's an important reason why I'm putting them back to my watch list. If there wasn't growth, I probably would be passing for now.
I think I might buy a few more shares at below $25. Obviously, everybody out there, please do your own research. I'm not a financial advisor. But below $25 per share, I might add a few shares to my dividend stock position on Paramount Global.
Yeah, you know what? I don't think that's a bad idea here, Lanny. I mean, you've done it the last few weeks. You've had a few ones nibbled here and there. Everyone, let us know, what do you think about Paramount in that comment section below. Are you buying, nibbling with Lanny, or are you setting a certain target price as well that you will be buying? It might not be hitting that yet. If you haven't already, subscribe to our channel. Give this video a nice thumbs up. Let's go, everybody. Let's keep pushing. Let's keep investing. Keep buying those income producing assets so we can all get to financial freedom.
Let's get to financial freedom. As Bert said it, that was Bert the Hurt and Lanny from the Dividend Diplomats, over and out.